I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show interest rate update for Tuesday, June 14th, and another really active market situation that we're going to be showing you here. A lot of things happening. If you're new to the channel, be sure to subscribe, comment, and like. And remember, this is for informational purposes only.
That's right, folks. We're smart, but we're not that smart.
Okay.
We are pretty smart, though.
Okay, 30-year fix today. We see higher than yesterday. We see at 5.625. The 15-year fix at 4.875.
The 5-year ARM up from yesterday, 5.25. The 30-year FHA, 4.875. And the 30-year VA, 4.875.
And these quotes are based off of these conventional FHA and VA loan assumptions right here that you see on the screen. These quotes also have no discount or extra fees. These just come with the regular standard fees.
Yeah, just standard closing costs. Every loan will have origination fees. They'll have standard closing costs, but there are no additional points, which can be added to a loan.
And again, the Mortgage Brothers team is right here in Arizona, right here in Phoenix. This is what we do. We work on purchases, refinances. But let's just look at what the national average is. What are banks charging out there for a 30-year fix today?
Holy cow, that is 6?
That's right. This is the Mortgage News Daily. And what they do is they kind of survey what the quotes are. They don't exactly tell us what those scenarios are, but we can tell you for like 9 out of 10 times, interest rates that you're going to be quoted on a 30-year fix, even if you have excellent credit, will be probably close to 6%. Mm-hmm. Now, 6%. Now, as a mortgage broker, we are, so this is the 30-year fix. They're saying it's 6.18. We are charging right now, based off of these scenarios, we're seeing interest rates on the 30-year fix at 5.625.
Wow, what a difference!
Big difference.
It's huge.
Yeah, and if you were going with most banks, if they were going to be charging you 5.625, they'd be having huge discount points.
Yeah, and why is that? Because they have one program, they have one pricing matrix they have to go towards. We can actually shop. I mean, we're out there constantly looking.
That's right. And, we're just priced well. We have great low fees and great service. So if you are in contract or just going to be getting into contract soon, be sure to contact us. We'll be going over your scenario and we can tell you what the pricing looks like. So tomorrow is a big day. The Fed's meeting. It's June 15th, right? That's tomorrow. It's Wednesday. They're going to be telling us what the Fed rate move will be. Last month, May 4th, they raised the Fed rate 0.5%, which makes that Fed rate now at 75 or 0.75%. And just yesterday, again, this information that I'm showing you is showing you the percentage chances that the Chicago Mercantile Exchange option traders.
Well, there's a mouthful.
Yeah. So these traders are betting. It's like betting on the Super Bowl. Right, who's going to win?
Right.
And then they are betting that there's a 94% chance that Jerome Powell will tell us that they're going to raise the rates 75 basis points. That's 0.75. And you know what, people, when you hear 75 basis points, that just means 0.75. Or anytime you hear basis points,
that's right. If you were to take 1% and split it up into 100 pieces, one piece is a basis point. Yeah. So you're basically taking 1%, dividing it by 12, or dividing it by 100, and we're coming up with 0.75, so 75 basis points.
That's right. So you'll hear it, if you're watching the news, the financial news, they'll say 100 basis points. That's 1%.
Mm-hmm. It sounds huge.
Yeah. So yesterday, everybody was betting 1 week ago. There was like an 80% chance it would be a 50% or 0.5% raise. Today, it's only a 6% chance that it will be a 0.5% raise. Mm-hmm. So anyway, big change, and that's that sentiment. And we've seen the interest rates really climb since yesterday, or it's really since Friday. Yesterday was a really, really rough day. Yeah. One of the worst days in our market that we've seen in many, many years.
From an interest rate perspective, it was a little bit tougher on the market as well, but mainly from an interest rate perspective.
Correct. Yeah, that's a good point. So what you'll see here is up on top, the 30-year fixed history from 1971, and you'll see this channel. Now, I drew these lines here. I've showed these channels here for a while. This busted out, this 30-year fixed busted out of this channel in about March 2022 this year. And this is where interest rates are right now. This is the 30-year fixed. Mm-hmm. And here's a chart for the Fed rate Currently, the Fed rate's at 0.75. And I know, so you can see my cursor. That's 0.75. So you can see the dotted purple marks there. That is where the Fed rate, that's where traders on Wall Street believe that's the target. That's the target Fed rate.
That's why they're calling it a target, because they're shooting for that. They just can't make it that.
Yeah, so they believe that. Okay, today's we're the month of June. Then there's a July. Then there's a September, and then there's a November. There's a schedule, and it's actually not every month, but there's a couple months they actually skip. But basically, here's the marks that I put down here. How they get to 3.25 to 3.75. So that's taking their interest rates from where we are today up about 3%. Mm-hmm. Now, remember, look at the 30-year fix. That's already up. The 30-year fix is, isn't that, don't they look awfully similar? They look identical. It's just the only difference is the 30-year fix is already moved. 30-year fix is moved, and the Fed rate hasn't yet. So if the Fed, like Jerome Powell tells us, you know what? Looks like there's going to be tough economic times coming. We're going to hold back. We're not going to be be as aggressive with our Fed rate hikes. We will see the stock markets probably typically rally. We'll probably see the 30-year fix immediately come down. Mm-hmm. Anyway,
this is maybe crazy, but the way that the Fed, funds rate works, it's kind of like if they were forecasters and they're like, "Hey, it's going to rain tomorrow, folks." Guess what everyone's going to do? Tonight, they're going to go out and buy an umbrella, and you're going to see people walking around with umbrellas. Okay?
Yeah.
That doesn't mean that it's going to rain. Now, the next day, if they're like, oh, it's going to be sunny, you're going to see people showing up on the boardwalk with, like, sun lotion or sunscreen. Doesn't mean that it's going to be sunny, but they're simply waiting for indicators. People are waiting for indicators from the Feds. So that's how that's working.
I like that analogy. That's really good. Absolutely. That's a good one. I mean, so really, it's just that simple. We monitor this Monday through Friday. We do this interest rate update, so be sure to follow, subscribe, comment, click the notification bell, and we'll be back tomorrow giving you the update on what that Fed. Actually, the Fed's speaking around noon, about 11 o'clock Arizona time. Okay. So we'll probably do this recording before that, but everybody will be hearing it in the news, and we'll report on it.
All right, perfect. Hey, thanks a lot, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com, and be sure to take a look at all of our other videos on our channel.